The price of Bitcoin is breaking down, a major support from higher lows of the last few days, as you can see on the chart. Now, on the higher time frame, the question is, have we finished 5 waves to the upside, looking at Elliott wave theory, the bull run in 2023, 2024, and peaking out this year, and we are going to see a major ABC correction throughout the next coming months, getting below $50,000? Or do we still have hope that we are just going to manage to find support here in between $70,000 and $80,000 and form this reaccumulation schematic? We're just going to get a bit of volatility, potentially test below 78K one more time. I'm going to explain in detail what are the different scenarios that could happen here on the 1 hourly, 4 hourly time frame, just to understand, hey, what is the bullish case scenario after having all of that great news in the US, Bitcoin reserve, and now the price is really not doing much? Has this been a trap? We should be pumping very aggressively. This has to be one of the most important news about Bitcoin throughout the history, and the price is really not doing much. It's actually going down. Is this signaling that we are really topping out? Well, we need to understand this movement to the downside. What are the different options? Because we are interested in taking some trading opportunities at certain levels that I want to explain here on the mid-higher time frame. Okay, so make sure to stay tuned. By the way, make sure to take advantage of that great bonus here that we do have on weeks, guys. You do get 50% deposit bonus. It's a $1,000 cap. So if you deposit $2,000, you're going to get $1,000. If you deposit $500, you get $250. You need to transfer those funds to your futures account and wait 48 to 72 hours, and you'll be getting that airdrop. You also get 25% fee reduction on your trades, guys, just by signing up with a second link down below in the description. For anybody that doesn't want to give any information, you can sign up with an email and a password as well, guys. Make sure to take advantage of weeks. So yes, we are breaking down right now. What is next? What are the most important levels? What is the bullish case? What is the bearish case? Well, let's start off with the ultimate bullish case scenario. Then we go through the bearish case scenario, which I do think has ever so slightly higher probability, and I will be explaining throughout this video update. Now, the extreme bullish case scenario, we are finished here with a corrective structure. No matter which movement we are looking at throughout this episode, there's only a short-term bearish case scenario, which is actually getting below $78,000, right? That would be a move of $6,000, $7,000, maybe in the next coming days, but I would still be quite bullish, and they're very good, interesting levels to get a massive bounce. But yes, let's stay real. We are downtrending after all of the good news. This ain't looking too great. So what we do have here is a WXY. As you can see, there's been a beautiful triangle formation throughout the last week. Now, it looks like that we are breaking that support, but it is true that in a triangle, a lot of fake outs do happen on your E wave. Now, as long as you do not take out that C wave, this triangle is still very much valid. There is only one big major level that I would be looking at to speculate that this is going to get a bounce. And it's a naked point of control that we have here from last Tuesday. There's a naked point of control right over here at this zone, around about $83,500. That is coming all the way down to the 7/8 Fibonacci and the 0.88 Fibonacci. You see that point of control in between the 7/8 and the 0.88, and this is your last zone for the bulls if this is going to be a bullish triangle, right? And most of you might believe, hey, this is a triangle coming from a downtrend, so the highest probability is actually breaking down. Forget about trying to detect the bottom, but I'm just saying this is a possibility, right? It's going to be very hard to catch that bottom, even though if you wick down from here and then you get a massive reversal, right? It's going to be like, where should I enter? How can I manage my risk? Well, for me, I'm going to keep it very simple. We do have the naked point of control. That is the only level that I would want to see here from this consolidation of last Tuesday, sitting around about $83,500. That naked point of control is the only level that I am going to use as guidance. If we do get beneath the naked point of control, I'm not interested in a long position. I would be looking for that low at 81,500 from last Tuesday to be hit. Okay, anything beneath the naked point of control and the 7/8 Fibonacci is not going to be tradable for me for a long position. If we do break down from that level, I am not interested. The moment we wick down below and get back above the 7/8, okay, I will attempt a possible long position only if the reaction is good. I'm putting my stop losses relatively tight beneath the low of the potential fake out. Hey, if this were to be a valid count and we do get a bounce, the rally could be absolutely awesome in the next coming days. So the risk to reward, little stop losses beneath the lows of the fake out, you can manage risk so well if this were to be a good bullish case. Okay, so the only levels of interest that I have is the 7/8 Fibonacci. We are only $1,000 away from that level, not even $1,000. So this might happen, all right, throughout the next coming hours. And if we break through the level, then I'm looking for this low to be taken, okay? Only trading above the 7/8 Fibonacci, the 0.88 will be a risky bet, okay? But you can use that level as guidance as well. If you believe beneath the 0.88, you're not interested. If you tap the 0.88, you get a recovery. Then I'll sniper a long position, stop loss beneath the low of the fake out. As soon as we get a bounce of a few $100s, I'll start being defensive with my stop loss. Local double bottoms in this range is very common. The bulls need to hold this range if we are looking at this WXY, finishing your Y wave in this triangle that we formed throughout last week. So that is the bullish case. 7/8 Fibonacci, naked point of control, they're very close together, and the 0.88, those are the last levels where the price could bounce, because eventually, if you break them, you're taking out this low right over here. So that is the bullish case. WXY, we're looking at the 7/8 or the 0.88 to actually find support and get a massive reversal. It seems like unreal that this could happen right now because we are downtrending. Look at the good news that we've had throughout the week. Okay, crypto summit. Rest of it, dollar index is actually collapsing throughout this week. Okay, Monday to Friday, we've been seeing a massive move to the downside. Doesn't mean a weak dollar is going to be a strong Bitcoin. What's going on? This does not look like we are going to get a massive reversal. The bull market top is in. That is it, guys. We are going down. We need to give this a shot. Of course, good risk management, guys. We can trade this with very good risk management. There's a lot of people that get into massive shorts, massive longs, and add to position. It's going to reverse at some point, and that's when you get wrecked, guys. Only trade those important levels because you do have a technical reason to back it up. Let's go right away with the bearish case scenario that does look very interesting in my opinion. Of course, we do have several scenarios. Let's go here with the first one. Then I got some different options. The first one would be WXY. We have finished here a zigzag move, as you can see. So you have a movement in an A wave, a flat in your B wave, and then a movement down. Okay, we are looking at this as a possible zigzag. Then you got your X wave. It could be a triangle. It could be a kind of a running flat situation. I'm not liking it too much. Okay, your X could be here. Your X could be right over there. It doesn't really matter. But most importantly, what you're looking at here is the latest move that did look very impulsive. We got a significant bounce on Donald Trump's tweet as well, but that is forming a lower high. What does that mean? Well, eventually, this does look quite impulsive. This looks very three-wavy, meaning that, yeah, we could break down here pretty much with a high amount of volume and try and attempt and break out $78,000. That's when it's going to be looking interesting. This is where I'm looking at possible zigzag move where you have the impulse, you have the bounce, and right now you have the first initial movement down, a bounce, and then a breakdown, okay? And then you form that ultimate zigzag move to the downside to complete your WXY, okay? What you're looking at here basically from the last couple of weeks is a large zigzag move. It still does not look incredibly impulsive to the downside. All of this really does look corrective. So yeah, we could go lower. We could dip down $5,000, $6,000, $7,000 from current price levels, but I would still look at this as a potential correction. There's no big major volume, big impulsive moves to the downside. Only this one, and the bounce was just too far away up here to consider it a fourth wave, right? You got a 1, 2, 1, 2, 3, 4, 5, all right, or even a triple 1, 2 here. That could be the case with your second 1, 2 right over there. So it is just a big major bounce, and it still looks very, very corrective. Now, with this scenario, you would expect this zigzag to have a significant breakdown. There is one major level that I am looking at. That is a weekly naked point of control, as mentioned a few days ago. We do have that level at $76,300 range. This is a guideline. The moment the price breaks beneath this level, I am not interested in any long positions. If we were to get a reaction at that level, start trading above it, right? You're beneath it, no long trade. You're above it, you got a long trade, and you got your stop loss beneath the possible fake down. And you do have a valid corrective structure here in a WXY. As I mentioned, this does not look impulsive to the downside. So I would see this as an opportunity zone. We want to be very careful of the breakdown, because if we do break down from this level, it could get messy and we could drop several $1,000s to the downside if we do not hold that $76,000 range. Those are basically the scenarios. Of course, we do have some other options, okay, that I mentioned throughout a live stream just a few days ago, okay, which is, yeah, basically looking at this scenario right over here, okay. This is the one that looks like that could be playing out if we do not hold this range over here, the 7.8 and the 0.88, as mentioned, from this movement to the upside for that bullish triangle structure. If we were to break down, well, this is the other scenario. This has been your X already. You formed a 3-wave structure. And right now what you're doing is forming another 3-wave structure to complete your Y wave. And the $76,000 range is your best bet to see the reaction and proof of support to find that bounce. Other scenarios that are possible, well, we do have the contracting diagonal, okay? We did mention this a few days ago, but as I mentioned as well, this is extremely early to even take this into consideration, because yeah, we need to see more waves in this, right? We need the third wave in, and then possibly speculate on the fourth wave if we were to get a rejection from $97,000, $98,000. Then we can start talk about this scenario, but we need to put it on the chart just like we did a few days ago, because it is still possible, right? As long as you're forming a higher low, you're not taking out $81,200. It is still very much valid, but we'll talk about this in the next coming days. Another scenario that is possible, this one right over here, it is a possibility where you're literally forming a 3-wave structure formed with multiple 3 waves. You got a 3-wave right over here. You got a 3-wave right over here, right? This is taking out $81,500. And then you manage to recover in a 3-wave structure to take out the highs here from last Sunday above $95,000. That is also possible. So is a swing failure pattern from these lows possible? Well, we do have the 0.88 from the pivot low to the pivot high. I would just give it a shot. If the 0.88 holds, it could be a sniper long position with stop loss beneath the low. This is a zone that we need to be very careful, because yeah, we are downtrending, and people that do not know how to catch these specific levels and manage risk. So if you do get stopped out, it is just a little scratch in your account. People do not know how to handle these situations and try and catch the bottom. It is the 0.88 that needs to hold. Anything beneath the 0.88, there will be no long positions until we take out $78,000. So this is a guideline. You're beneath the level, not interested. As soon as you get above it, you can start sniping. You could form double bottoms. 1 or 2 stop losses with very, very tight stop losses is going to be just fine. If you do get the bounce, you'll be paying off over 10 times your stop loss. It is really that simple. Manage risk. A few stop losses is part of the game. Manage risk accordingly. These are some of the scenarios that I'm looking at here on the higher time frame. This one, doesn't look too great. For the moment, we are dropping down here. We are forming a lower high. So really the two options that we do have left here is these ones right over here, right? The one that is actually taking out the lows from last Tuesday, right? And manages to bounce at the 0.88, or the one in the white, okay, that's taking out not only last Tuesday's lows, but even the previous Friday here at $78,000. And that's where it's going to be looking interesting, guys. The 76,000 here, naked point of control, weekly naked point of control, has to be that zone of interest, right? This is the zone where we could hold as support and get a epic bounce. This is a possible swing long position. We would have to see a miracle, but then probably we get good news coming in, right, throughout the next 1 to 2 weeks. And then, people were like, this is because of the bullish news. It's all on the charts, guys. The levels that need to hold here to maintain the bullish case scenario is right over here at $76,000 to take into consideration that WXY scenario, which would be looking like this. It is this wave right over here. Legends, that is really it on the higher time frame. If you want more lower time frame updates, you do have the Legends trading community. We are updating there every single day, every single morning, guys. You have the 4th link in the description. That is the Legends trading community. And you also get the modules to learn the technical analysis to look for those trading setups. Thank you very much for joining, and I will see you in the next one.